Your intelligence is not a financial advantage, it's a trap. In 1998, a hedge fund run by Nobel Prize winners collapsed. They lost $4.6 billion in 4 months. That same decade, a Vermont janitor was quietly building an $8 million fortune. He never earned more than a modest wage. Same markets, same economy, opposite outcomes. The difference had nothing to do with IQ, which means everything you believe about being smart with money is wrong. You already know this feeling. You know exactly what you should do with money. Save more, invest earlier, spend less. You could explain compound interest at a dinner party, and yet, the credit card balance is still there. The investing app you downloaded sits empty. The raise vanished into a lifestyle you never decided to upgrade. Every January, the same promises. Every December, the same numbers. So you keep asking the same quiet question, what is wrong with me? Here is the uncomfortable answer. Nothing. You are not lazy. You are not broken. Something is wrong with the question. In 2020, a financial writer named Morgan Housel published a book, The Psychology of Money. It sold millions of copies worldwide, one of the best-selling finance books in history. But calling it a finance book misses the point. It is a diagnosis. Housel spent years studying why brilliant people destroy their own wealth. His conclusion is simple and brutal. Success with money has almost nothing to do with knowledge. It has everything to do with behavior. And behavior is hard to teach, even to smart people. Especially to smart people. The first idea explains that hedge fund from the opening. Call it the intelligence trap. Intelligence raises your income. It does almost nothing to protect your wealth. Because smart people carry a hidden liability. They trust their own thinking too much. They believe they can outthink the market, outsmart risk, see the crash coming. And the more credentials they collect, the deeper the belief grows. Think about what makes money strange. No dropout performs surgery better than a surgeon. No amateur builds bridges better than an engineer. But with money, a janitor can beat a Nobel laureate. Because money is not physics. It does not reward raw processing power. It rewards temperament. Housel opens his book with 2 men. Ronald Read spent his life as a janitor and gas station attendant. When he died, he left behind $8 million. Richard Fusconi was his opposite, Harvard MBA, Merrill Lynch executive, so successful he retired at 40 to invest his own fortune. By 2008, he was declaring bankruptcy. The janitor beat the Harvard executive, not with knowledge, with decades of boring, consistent behavior. And that hedge fund, long-term capital management. Its founders included 2 Nobel Prize-winning economists. For 4 years, their returns topped 30% annually. Wall Street begged for access. Banks lent them over $100 billion. Then Russia defaulted and their leverage buried them. They risked money they needed to chase money they never needed. The smartest people in finance, destroyed by their own confidence. You see this pattern everywhere once you know it. The doctor earning $400,000 living paycheck to paycheck. The engineer who day trades his bonus into nothing. The consultant with a spreadsheet for everything except her own spending. Ask any of them about diversification. You will get a flawless lecture. Then check their portfolio, 3 tech stocks and a crypto wallet. Intelligence built their income. Then intelligence whispered that the rules did not apply to them. That is the trap. Being smart makes you confident. Confidence makes you exposed. And nobody audits their own blind spot. So here is the shift. Stop optimizing to be right. Start optimizing to never be ruined. Here is what that actually means. You do not bet everything on being right. You bet small enough to survive being wrong. The janitor never made one brilliant decision in his life. He simply avoided every catastrophic one for 50 years. Wealth is not built by genius moves. It is built by the absence of stupid ones. Boring is not a flaw in the plan. Boring is the plan. Lower the intelligence requirement. Raise the discipline requirement. The second idea is the one almost everyone misses. Getting rich and staying rich are not the same skill. They are opposite skills. Getting rich rewards optimism, risk, aggression, saying yes to everything. Staying rich demands the reverse: paranoia, humility, room for error, saying no constantly. Most people master one mode. Almost nobody switches between them, because the mindset that built the fortune feels sacred. Ask yourself honestly, which mode are you in right now? Most people cannot answer. That is the problem, and the transition point is exactly where fortunes die. Housel tells the story of Jesse Livermore, the greatest stock trader of the early 20th century. When the market crashed in 1929, Livermore was positioned short. In a single day, he made the equivalent of $3 billion. His wife thought they were ruined like everyone else. He walked through the door and announced the opposite. They were richer than they had ever been. He had done this before, made fortunes, lost fortunes. But 1929 felt different. It felt like proof. Within 4 years, it was gone, all of it. The crash made him feel invincible, so he took bigger positions, more leverage, more conviction. The exact skills that made him rich destroyed him. His story ends in tragedy. He never learned there was a second game. You have watched this happen in miniature. The friend who turned 10,000 into 80 in crypto, then wrote it all the way back to zero, because selling felt like quitting. The entrepreneur who sold one company, then bet everything on the next. Winning taught them the wrong lesson. It taught them the win was pure skill. Luck never sends an invoice. The shift is this: when you win, get more careful, not less. Survival is the strategy. Getting rich is a sprint you chose. Staying rich is a marathon you never finish. Room for error is not weakness. It is the only plan that survives surprises. Every legendary fortune shares one silent ingredient. It stayed in the game long enough to compound. 2 ideas in, 1 pattern emerging. Behavior beats brilliance every single time. This is the kind of pattern Mentotex exists to find. But the third idea goes somewhere darker, into the wiring of your own brain. Housel dedicates a whole chapter to a quiet warning: you will change. Call this idea the stranger you'll become. Right now, you are planning for someone who does not exist, someone with different values, different fears, a different definition of enough. And you consistently underestimate how different they will be. Everyone does, at every age, without exception. Housel argues long-term planning is harder than it looks, because the planner keeps changing. Housel points to research made famous by Harvard psychologist Daniel Gilbert. It is called the end of history illusion. At every age, people admit they changed enormously over the past decade. Then they predict they will barely change in the next one. They are wrong every time. At 20, at 40, at 60, Gilbert's team measured over 19,000 people. The illusion held at every single age. People tattoo the taste of a self they will outgrow, then pay to remove it, and neuroscience makes it stranger. Psychologist Hal Hirschfield scanned people's brains as they imagined their future selves. The activity pattern matched something unexpected. Thinking about a stranger, your own brain files future you under other people. That is why saving feels like losing. Retirement planning feels abstract for a neurological reason. You are handing money to someone you have never met. This is why the math never saves you. Take $100 now, or $120 next month. Most people grab now. That is a 20% monthly return, rejected instantly. Not because you are irrational, because your brain is being literal. The future is a stranger's problem. The shift is not willpower. Willpower is a negotiation you will lose. The shift is this: automate the transfer on payday. Automate the index fund. Automate the boring. Make the money move before your brain can vote. Discipline, you must remember, will fail you. Discipline you cannot avoid will not. The stranger does not need your empathy, only your systems. So, does the book get everything right? Not quite. 3 ideas in, and Housel has only shown you the present tense, confidence, the gap between getting rich and staying rich, the stranger inside your own skull. There's a 4th force still unaccounted for, bigger than intelligence, older than habit. It decided the shape of your life, before you were old enough to have an opinion, before you could even walk. Housel opens his actual book with 2 teenagers and a single computer, both brilliant, both certain of the future ahead of them. One of them never gets the ending you'd expect. That story, and 2 more just like it, are next. If this made you think, subscribe. The next video will make you question more.